know if you've heard of Google, but it practically touches every aspect of your life. They know a creepy amount about your buying habits, and they know what kind of porn you look at. Sit with that for a while. Disgusting. Disgusting. Let's get to it. So just a quick summary about Google. It's a very simple business, which is one of the reasons I like it. Warren Buffett says he likes businesses that are simple, businesses that he can understand, and I don't totally agree with that. I think that with enough due diligence and analysis, you can generally diversify yourself a little bit into industries that you aren't totally an expert on. Case in point, literally anyone who buys tech stocks that isn't a software engineer or like a molecular scientist, okay? Sometimes you know what's good. Besides, software is the closest thing we have to magic, which is why it's a good field to be in and probably a good field to invest in for the foreseeable future. Anyway, Google. I love Google because they're a very simple business. As you can see by the chart, the majority of their income comes from advertising, a little bit from YouTube, Google Ad Network, search advertising. They're basically an advertising business. That's their bread and butter. That's what they do, and they do it better than anyone else. They have a strong network effect that's very hard to break because Googling, as you know, is literally a verb. When was the last time you heard someone say, let's Bing it? Just Bing it. Sounds like a sex thing. Google has a strong network effect because of its user base. Advertisers see value in that, so they'll pay for it. And as the global population increases, ad spend should correspondingly increase as well. Now, there may be short-term declines. In the case of a market correction, if there's a recession, companies generally tighten their belts. They tighten their marketing spend. They tighten a lot of their line items on their budgets. But eventually it has to rebound. So the threat of a recession looms over our heads at all times. But that doesn't mean you can sit on the sidelines and miss out on a bull run potentially. Now, I've been saying that the second half of the year might be weaker. Again, I can't see the future. This isn't financial advice, but the way I look at it and what I'm doing is investing slowly into the market throughout the year. And I'm keeping powder dry. Don't dump all your cash into the first dip you see. If there's a short-term decline, eventually the market will turn around and rise again. And generally speaking, I find it very hard to believe that Google's top line will be smaller than it is today in 5 years, in 10 years. So I like their valuation. At the moment, it could be better, but it's not the worst thing you could do to get into Google at the current price. I also like Google because they're very financially healthy. They have very little debt, and they're basically sitting on $111 billion of cash. Their leverage ratios are all stellar. Another thing I like about their search business is that Android mobile gives them an advantage because globally, Android makes up 70% of the mobile market, which gives them an advantage in routing search traffic. Now, at some point, I can see this coming up for question as an issue, as a monopoly thing. There could be regulatory issues, particularly in Europe, because in America, we love monopolies. We don't give a shit. But I think that a company as powerful as Google will be able to successfully fend off these sorts of legal and regulatory attacks. But maybe I'm cynical. Maybe that's because I believe in crony capitalism and the unyielding power of lobbyists. But I'm trying to make decisions based off of the material realities as I see them to make some money, because after all, that's what it's all about. I invest because I'm a huge nerd and I enjoy doing DD on companies and looking at numbers and charts. Okay, that's my problem. I wish I wasn't like that, but I am. And secondly, I do it because I want to make money. You only need one of those reasons to be an investor. Anyway, let's look at Google's traffic compared to Bing. All right, let's knock on Bing. Let's knock on Microsoft. This is the global search engine traffic from 2018 through 2024. Look at that. They almost broke 3.75%. That's Bing. Okay, that's Microsoft. That's why you don't ever hear anyone say just Bing it. It sounds gross. Now here's Google compared to everyone else. Okay, I'm an investor. I don't like competition. I like monopolies. I like crony capitalism. I'm joking. Don't get all mad at me in the comments, okay? I don't like crony capitalism, but it exists, and I'm going to take advantage of it by investing in Google. But look at that. You got 90% search history for Google, and everybody else is down here, down in like 4% land. Look at that. Bing, Yandex, Yahoo. Yahoo surprised me when I saw this chart, actually. I thought Yahoo would have been a little bit higher. I like Yahoo Finance, but I don't think I ever Yahoo search anything. And Google just is incomparable. They're the best. They know a creepy amount of information about you and your buying habits, and they pretty much feed you what you want if you can search the right stuff. Okay, Google is like in the future when 1984 becomes fully manifested in our everyday lives, Google will be one of the companies that holds the lever because they know a creepy amount of information about you. And I don't know about you, but I want to participate in their creepy growth. Meta is another company that I think is creepy and knows too much about you. But again, not investing advice. Everything I'm doing here is for entertainment purposes only, obviously. I love it. I love a monopoly. Let's go. Some analysts say that Google doesn't have very diverse revenue streams because the majority of their business is in advertising. But again, I think that when it comes to advertising, they are far and away the best. There's not even a close second. There's not even a distant second, which is a point that I made earlier. All right, at the time I whipped this together, Google's stock price was $171.31, which puts it at a price to earnings ratio of 24.61. Now, historically, it's dropped as low as 20, so all things being equal, I would prefer to wait for it to dip and buy it at 20 price to earnings. But if we look at today, it dipped to 168.40. So it's looking even more favorable than the time I wrote this. And if we look at our 3-month Bollinger Band, we appear to be near the bottom. And the MACD is kind of inconclusive. Looks like it might sink a little bit more. RSI is low, which is good. It is near the bottom end of the Bollinger Band, and the volatility looks like it spread it out quite a bit. So I would expect the price to start stabilizing. Again, I can't see the future. It could continue to sink, but I'd be happy to buy it at 168 because basically I thought it was good at the time I put all this info together. So the trailing 12-month earning per share is $6.96. Now, if you just take the analyst estimate blindly and plug it in at the same price, the 2025 analyst estimate, that would put you at a PE ratio of 21.91, call it 22, which is a little bit closer to that 20 price to earnings that I would have liked. Let's do some quick math. The current PE ratio of $6.96, assuming a modest 10% increase in 2025, puts us at $7.65, which is slightly lower than the analyst estimate. I'm okay projecting a 10% increase personally for Google's business. If they can grow quarter on quarter somewhere in the mid single digits, that could be achievable. Now, tomorrow, if the price sunk and I found it at a 20 times price to earnings, I'd pretty much just buy it outright. It's not financial advice, but I would pretty much buy 100 shares straight away and probably sell a call option with a strike price that's 10% away out of the money, expiring December or January, to at least lock in some gain and reduce my basis even further. Again, hedging against the upside a little bit in the event that the market continues to perform poorly the rest of the year, like it has been the past couple of weeks. Again, I just wanted to show you a visual representation here of the PE ratio. So as of July 30th, we were at 26.22, which is slightly higher than I would have liked to buy it. I saw it earlier when I took this data at about 24, which is a little bit better. But as you can see, if you draw a line at about 20, you can see the sweet spot. Ideally, that's where you want it. Now, if earnings grow, this all comes out in the wash, but I just want you to start thinking about historical trends. Don't just look at a PE ratio today and say, oh, hey, that's great compared to other stocks. You always want to look at whatever stock you're doing DD on in particular, that stock's history, not the industry, not other stocks. I mean, you want to look at all that, but you have to look at where this particular stock has been. Now, Google is a blue chip company, immensely profitable, just mince money. So given all that and given their market leadership in the search business, they're definitely a company in which I feel very comfortable investing in and probably not losing too much sleep. Remember, you don't want to lose sleep, okay? Don't overextend yourself with investing and do your due diligence so you don't buy a company and then find yourself awake at night sweating. I definitely have some of those, okay? I'm not perfect, Veritiv is a recent example of a company that I bought, which is kind of tech adjacent. They do cooling systems, but they had really high volatility and they were kind of getting picked apart in the last earnings call. Not gonna lie, spooked me a little bit. For me, Google's a company I can buy and go to sleep easy at night. Even if it sinks, I'm just gonna buy more and it's gonna go up because it's Google. They're a fucking monopoly, okay? Crony capitalism, baby. So that's pretty much it, guys. Alphabet's search business, really, it's in a league of its own. And what else are you gonna do? Buy Bing or use Bing? I just want to mention something about Microsoft. Microsoft is a great company and I would love to own it. I think it's slightly high. I'm waiting for a dip, but Microsoft is a great company and it will continue to be immensely profitable. It's another humongous monopoly that touches every aspect of our lives. Okay, I have Google Sheets, I use Dropbox, but Microsoft tools are the best. Microsoft has a lot of lines of business that are very profitable. And when it comes to search, Bing is an afterthought. Okay, Bing is not what Microsoft does. Microsoft does what it does immensely well, but search is not something that is their core business. Now, Alphabet has as its core business search. And you know what they say about conglomerates? When you do too many things, you're not going to do them all particularly well. If your organization is focused on a task, it will execute that task better. And that's why I like Google. Google makes so much money that it gambles on all sorts of crazy things. They have Waymo, which is the driverless AI company, which I don't know about you, but I wouldn't get into a driverless AI car. But they have so much cash that they just take a lot of random bets into other businesses and see if any of them pan out. But all that stuff is irrelevant to their main business, which is search. I hope you enjoyed this video. Let me know what you think in the comments, but don't be a dick.